2 days' time, Britain will hold its referendum that has led to heated debates, fear on the markets and even a murder. On Thursday, Britons will vote on whether to remain within the European Union or leave. The rand strengthened again today as the stay camp seems to be in the lead, certainly amongst the bookies. Fears of a British exit or Brexit have been replaced with the likelihood of a BREMAIN, as it's now called. Well, in the run-up, we've been looking at the impact on South Africa, the possible impact. Of course, nobody knows exactly what's going to happen. Agbiz Research has released its opinion on some implications for the agricultural sector. We're now joined in our Pretoria studio live by Agbiz economist Wandile Sihlobo. Good evening to you, Wandile. Let's first put this in context. As you've pointed out, we've just signed an agreement with the EU as part of the Southern African Development Community. Just tell me the importance of that agreement.
Now, look, these agreements are important. We've already been having one of the existing agreement with the EU side through the TDCA. And now we signed the recent one, which is the Economic Partnership Agreement as well, which would then open up a market for more of the South African goods to actually enter there, particularly on the agricultural side, looking on the citrus, looking on the wine, just on a wider side of that. So with this coming on into light, it does raise on some red flags. And I think that it is important for South African food processors and just the agricultural industry and the economy at large to really look at this and see what the implication and what's the meaning and the magnitude of these agreements are within South Africa.
So we're sitting at this precipice where we're going to have much better access across the EU, but if Britain leaves, that won't necessarily apply for the UK. Just explain the implications of a Brexit right now.
No, I mean, this doesn't really mean that we will not have access within the EU. But the most important thing is that Britain alone accounts for about 25% of the trade between South Africa and the EU, agricultural trade to be specific. And that's around about 7.4 billion rands of goods that South Africa export to the EU. So if then South Africa has this much at stake and then Britain gets to be out of that EU, that means that we won't be having access to that market now in the same basis that we were having, which is free trade that we're actually having in there. So that would necessitate that South Africa will have to negotiate new ways to say, how do we access the EU, the UK market? Are we going to establish new trade agreements and all of those things? But I mean, there's two ways of looking at this. Right now, we're accessing the UK market through the EU agreements. But if it's outside of that now, I'm sure that there might be some of the ways that the UK policymakers would say, how do we maintain these trade agreements with South Africa and other trading partners, which is then one of the rooms that might be open. But again, there's positive side also in that. If, for example, you look at the citrus industry in South Africa, it has to comply with some certain regulations before we export our citrus to the EU market. But if UK now gets to be outside of that, they might not have regulations that will be stronger as the one that we are actually currently facing now, with them being part of the EU, where they have to comply and do things in a uniform way within those countries. But again, the timing of all of this then might weigh in within all of this trade that is actually happening, and which is what we need to actually be focusing on to say, what are some other alternatives? Given that we stay in, we will be comfortable, but if we are getting out, what are some of the things that the South African businesses should be thinking on, as well as the guys who are sitting on a policy making side within the trade?
Wandile, could a Brexit even be beneficial? You're saying that we would need to renegotiate a trade deal with Britain. Could it not be even more favourable? Our Trade and Industry Minister has been suggesting that Britain may be looking for new partners outside of the EU, stronger partners for imports it may not be getting from the EU.
I think, look, the positive or benefiting way that we can actually access on. The first one is the one that I just mentioned now, that the UK doesn't plant much of the citrus. So if they get to be out of there, we won't be obliged to some of the competition and the regulation that comes with being part of the EU market. But also things like products like wine, which we export a lot to the EU market. You find that we have to comply with a certain quota that the EU market would say, okay, South Africa has to only export around about 500 million liters. But now if the UK gets to be out of there, then that's an added benefit, because that quota that we are actually having within the EU market will remain as is. But now with the UK out, we'll need to negotiate and send on additional liters in there, which will be positive for South Africa. But the most tricky thing now is that if the UK get to vote out and be out of the EU market, in short term, that means now we will be faced on with some higher tariff as the rules of the WTO, where now we'll have to comply with all of these high tariffs that will bear. And then now, how will those tariffs actually be on the South African industries? And at the same time, then in determining whether those tariffs will actually be high or will actually be, it will depend on what conversations will the UK lawmakers have with the South African ones. And in South Africa, as you know, that we're trading as the SACU partners. Now, we need to look at what Lesotho will be thinking, what Swaziland will be thinking in negotiating with the UK. If all of these countries are in agreement and South Africa is able then to strike a deal with the UK, then in that way it will be much favorable. Because if I may add, the UK is also having a lot at stake. It's not just South Africa selling to them. I mean, these guys, they sell to South Africa around about 2.2 billion worth of whiskey every year. They have around about 400 million that we spend buying their chicken, their powder milk. So it's a win-win situation. And I think in both sides, we will be looking at what comes out of this.
All right, so uncertain, but it could in fact be a win. Finally, Wandile, you mentioned these regulations in the EU. I think we had a problem with black spot. Our citrus for a while was in danger of not being accepted. And this is something that bugs the Britons. But on the other hand, they say, you know, if your oranges meet the requirements in one country, then you get your oranges into all the countries in the EU. What is it like dealing overall, I guess I'm asking, with this big block?
I mean, what happens is that the rules are as you just explained now. But now the problem is within the whole cluster of the EU market, there are some countries that are producing the oranges. So if you export South African oranges to the whole EU market and they having some element of that, or they do not meet their regulation, they will scared that, okay, look, if there is a black spot in the South African side, it would spread into some of the citrus farms that they're having in there. But with the UK now possibly being out of the EU, the UK doesn't plant any citrus. I don't think that there's much of any citrus trees that are actually planted in there. And commercially, they're not big. So with that, it will come in as a benefit, because whatever we'll be having in the South African market, we won't be faced with those regulations where they will say, okay, you have a black spot, so this black spot thing might spread on and affect our own crops, because it doesn't exist in there. So that's an added benefit for us.
All right, some fascinating insight. Thank you very much, Agbiz economist Wandile Sihlobo.